are some of the common blind spots you're seeing at executives as they cross into this $300,000 threshold?
So I think for most executives, if you're at a publicly traded company or a big firm that's doing HR and payroll for you, a big part of that is equity comp. So think about like a restricted stock unit grant. Generally, the company is going to do the withholding for you.
Okay.
And everything that you get is net after tax. They'll gross it up, the net will go in shares, and then they'll pay off the top and hold it to your uncle. So at the end of the year, when you're doing your taxes, they're pretty much matched.
Right.
So that's kind of pretty easy. There's not really much for me to do on that side of it. But the other things I really need to pay attention to, for example, a lot of high income earners may be really encouraged to pay off their house quickly or to pay cash for it. That may or may not make some sense depending on their tax bracket, interest rates, how much cash they have at the bank.
Yeah.
But we know it definitely decreases one of their deductions that they have.
Sure.
Other things that are simple, like if I'm saving for college for my children, believe it or not, a lot of parents still they have a stock portfolio and they're like, yeah, it's going to cost my son or daughter $250,000 to go to college.
Yeah.
I got a $2 million portfolio. I'll just pay it at that time.
Right.
And you're certainly missing an opportunity and you're not taking advantage of a tax window. So you could do things like segregate the money, put it in a college account, get a state tax deduction today, have the money go tax deferred, and then when it comes to college, it comes out tax free.
Right.
Versus if I'm in my stock account, I have appreciated securities.
Yeah.
Now I've got to sell some of those appreciated securities, so I'm probably going to trip cap gains.
Right.
And heaven forbid the tuition bill comes due at the same time we're having a correction. It could be a really bad situation. So I think things like that, I think aren't ideal.
Right.
And I think from a tax planning standpoint, I think more frequent contact with your financial team kind of makes sense. You don't want a bad surprise to hit you in April, because then you could have taxes and penalties on top of a really big tax bill.
Okay.